Rising interest rates, it makes you worry about buying bond funds. And yet, BMO ETFs recently announced a few bond ETFs, and here we have Rajiv Salgado, the head of BMO ETFs, to explain why. Welcome back, Rajiv.
Thank you, John. It's great to be here.
Now, I'm not sure, actually, that the last bunch of products were bond ETFs, or you had pre-existing ones.
Yes. So, Jonathan, what we've done with the fixed income marketplace in Canada, the investment-grade fixed income marketplace in Canada, is that we've taken that broad, homogeneous asset class, as most investors think of it, and actually broken it out into its bigger component parts. Because even within the fixed income market, different bonds behave differently in different kinds of economic environments. So what we've done with the bond market is sectioned it into different maturity segments and also sectioned it into different credit segments. So for example, in October, we brought out some short-term bond ETFs, Government of Canada's, the provincial governments, and corporate bonds.
Short defined as under 5 years?
Short defined as 1 to 5 year bonds. What we've done most recently in January is we've filled out the corporate bond portion of our bond market by bringing out 5 to 10 year bonds in the corporate area and 10-year plus bonds in the corporate area again. So mid-term corporate bonds and longer-term corporate bond ETFs. And they found good traction in our marketplace. In particular, that mid-term corporate bond ETF has been very popular.
Because I guess the idea there is by having a little longer maturity, you're getting that extra juice from the corporates. And you're saying it's not that much of a risk because of the spread?
Yeah, exactly. So the concern typically with longer-term bonds is what happens to the price of the bond when interest rates rise. And as you know, the market's been in this funny situation where about half of the investment community believes interest rates are about to rise imminently. The other half is not quite sure. So what corporate bonds do for you is they give you extra credit yield. They give you a higher yield than government bonds do, and that incremental spread can provide some cushion if rates do rise.
Which is how much, that extra spread?
The extra spread typically in that part of the curve is around 50 to 70 basis points.
Not all. I would have thought it would be higher, hundreds of basis points.
It does vary, John, over time.
We're not talking junk bonds, though.
No, these are not junk bonds. These are all investment-grade credit. So they range in credit from BBB through AAA bonds.
So do you have a high-yield sort of product as well?
We do have a U.S. high-yield bond ETF, which we launched last October. And what we did there was we took about 147 or so high-yield issuers in the U.S. market, created a bond ETF around those issuers, listed it on the Toronto Stock Exchange, and currency hedged the US dollar exposure out of it. So what that ETF does for investors, Canadian investors, is that it gives them the ability to transact in Canadian dollars, not have any exposure to the US dollar, but earn a much higher yield than they would by investing in the investment grade market in Canada.
Do you have a real return bond fund, an inflation index bond ETF yet?
We do not have an inflation-linked
I'm sure it's on the drawing boards.
Yes, we're looking at several different designs for that one.
Tell me about the one that you mentioned with the 10-year and beyond. I would have thought that seems very risky to get a 10-year bond fund at this moment in time.
There is definitely more volatility associated with longer-term bonds. As yields move up and down, those prices will react more than for shorter-term bonds. However, we have seen some good traction in that particular bond ETF as well.
Any other kind of, have you basically got your entire lineup here of fixed income? You still have a couple of gaps. We identified one.
Yes. Jonathan, we still haven't filled out the entire the investment-grade bond market in Canada, and our intent is to continue to bring out more bond ETFs in the investment-grade segment of the Canadian bond market.
Finally, last question, just a comment on, you're the only bank with ETFs so far. All the banks have traditionally had no low mutual funds. And TD once was in the market and then left. Do you see that the other banks responding to your successful launch here at all? Any signs of other competition coming?
Jonathan, I'm sure there's other people who are looking at this marketplace. I can't comment on the banks specifically, but what we've seen with ETFs in the last few years really has been that investors have finally understood the value proposition that ETFs bring to their portfolio. So I'm sure there's a variety of companies that are studying their options and thinking about when and if they want to enter the space.
Thanks very much, Rajiv Salgado, the head of BMO ETFs and the chief executive of Jones Hewitt Investment Counsel.
Thank you very much, John.